The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So we are up 16 points on the S&P cash, up 137 on the Dow. Nasdaq's up 47. Russell's off 1 is what I show. When we look at the CBOE consolidated tape, volume kind of coming in right where it was yesterday, so not more, not less, 4.7 billion shares on the consolidated tape. That's all indexes together. When we look at some of the other bigger stuff that was moving in the markets, got crude down 82 cents. Let's see, what else do we have out here that was moving a lot? Natural gas contract is just up a penny now. Had kind of a little bounce out on news, but not much going on there. And, of course, the roller coaster today was, of course, in the GLD, up to 1530, back down to 1506.70 as the last tick. And one of the reasons why I say sell when you can, not when you have to, and also cover when you can, not when you have to, when we were short gold. That probably would have been enough for me to click out at a lower price today. But, of course, then we see the same thing in the TLT, which is had a fairly decent bounce early in the day, gave it all up and more. We're back down below 140. And, you know, if I was short actually the ETF on that, I probably would have held it. But the issues with those are, of course, you got to sell it when you can. If it starts turning against you, you don't have a great deal of respite. It just goes to grow. But again, if you're looking for the textbook version of a double repo pattern from Joe DiNapoli, this is it. And like I said, you can either use the 3x3 displaced moving average. I thought that maybe it might get a little bounce back up to the trend line, a 3x3 down trend line. We didn't even get that. Got the pop this morning, gave it all back up. So 137's it. If you're looking to get back into that, that is where support's going to be. And we may have that by Monday or Tuesday now. So keep a close eye on that. But that's probably somewhere around the lows at 137. GLD, a little tougher. It got right back up to the 3x3. It's closed back down, but you've got fairly good support around the 140 area. There is the opportunity to go down to 137. But we'll have to see how this thing comes back and retest the 140 area. But again, you can see a lot of, when these things come off the top like these, you can see a lot of consolidation before the next move higher or lower comes. I suspect both of these may take a little bit longer to develop the next leg than a lot of people would give them credit for. So we've got big movements there, kind of smaller movements in the NASDAQ and the S&P. I wouldn't be surprised to see us back to 3,000 tomorrow. There's just not that much going on. We need about 10 billion shares. As I said, with an hour and 15 minutes left, we're only about half the volume to go break out the highs. So if you're bullish, you don't want it to go up there and tag those highs right now with the lighter volume. We're going to talk about options. Well, you know what? Why don't we just go ahead and, well, I don't have enough time to do them now, so we'll take a look. Anyway, we've got a lot of movement, but that bond market certainly looks like 138s in the next day or two to go hit that gap, maybe to on 136. And I think at that point we'll be in a much better position to probably put on positions overall in the equity markets too, not just in those markets when those come out. So if you have any questions, go ahead and email them to us today at path@tfnn.com. We're going to have Tim Ord on in the next segment. He's got a bunch of charts. If you want to follow along, we're going to show them on Tiger TV, but I'll be glad to email them too. So just email me, path@tfnn.com. We'll send you the charts and you can follow along as he's speaking. But we will show them in the den and on Tiger TV also. path@tfnn.com. And if you want to get back with us in the, I think it's about 2:40 Eastern Time area, you can call us at 877-927-6648. We'll do our history now. We'll get it all out of the way and talk to Tim after the break.
And it's all just a little bit of history repeating.
And if I can find this thing. On this day in 1958, researcher Jack Kilby demonstrates the first integrated circuit to other researchers and executives at Texas Instruments. He was awarded the Nobel Prize in Physics on December 10th, 2000, died in 2005. He was the son of a rural electricity company dude that basically supplied a lot of small towns in Missouri and Kansas with electricity. And I guess it was in the late 1930s, they had a giant ice storm that broke all the power poles off in that area. And they used ham radio to connect with all these small hamlets across Kansas and Missouri. As a young boy of about 10, 12 years old, he got to do a little bit on the ham radio and started getting interested in electronics. Graduated in 1947 from college with a degree in physics, went to work, and in 1958 with Texas Instruments did create the first integrated circuit. Very, very smart guy, worked with Texas Instruments until the day he died in 2005. Quite a smart dude. But if there is one guy that deserves a lot of praise for what is Silicon Valley now, originally hardware and now a lot more about software, it was Jack Kilby, a hero of Silicon Valley, and of course electronics and a lot more. He did a lot of other stuff, but his Nobel Prize was for this, but he came up with a lot of stuff after that. And of course taught a great deal of the people now that actually design all our equipment. He was a professor at A&M in Texas. We'll be back in a minute with Tim Ord, and we'll talk and see what he has to say about the long term in the market.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're back. We've got Tim Ord on the line. If you're not familiar with Tim, he's been a market timer for years upon years. Market timer of the year in many different sectors, indexes, gold, and other things also. Probably the definitive book when it comes to straight Wyckoff volume trading methods with the secret science of price and volume, which I recommend highly. How you doing today, Tim?
Good. Thanks for having me on, Dave. And sent you some charts. I want to take a look at them and see what you think.
Okay. Well, we got chart up number one. And anybody that wants to, of course, if they email me at path@tfnn.com, I'll send them the copies too. But we've got this first one. It is AAII Bear.
Right. Well, what it is the American Association of Individual Investors, and it's a bull-bear ratio. And that's the middle chart. The top window is the SPX. And the middle one is, again, the American Association of Individual Investors Bull Fund, and it's divided by the Bear Fund, so it's actually a ratio. So what it does, it goes back, to late 2014, and every time it got down below 0.75, this might go back. This is a weekly chart, so it's not a daily chart, even though I got a daily SPX up there. I meant to say it was actually a weekly chart. So this is a bigger picture of what the market kind of is and what it's done in the past. But if you notice, every time it got below 0.75, going back to 2014, we're usually at an intermediate term low. And we hit that back in a month or so ago when the market was bouncing around, the July-August time frame, and that ratio is way below 0.75, suggesting that the market was making an intermediate term low. And the last time it did it back in looks like about May-June time frame, and that turned out to be correct. Market went up and hit new highs. But even though we moved up past 0.75, it's still in an area where it's more bullish than bearish, I'll put it that way. So intermediate term wise, the market's probably made an intermediate term low, even though we're probably due for some sort of consolidation. The intermediate term trend, in my opinion, is probably up till year end, according to this chart. So
Do you know what,
it's a weekly chart, and go ahead. I'm sorry.
I was going to say, do you know what the all-time low on this is? I see a fairly big low back here in 2016. It looks just a little bit deeper.
It looks like almost down to 0.5 or something.
Yeah.
So is there a chance we can make a double low? If you notice, we really don't do that much. I mean, if you look in mid-2016, you hit a low, then you came back and hit another low, about the same area. And so there's possibility, I guess, we could come back down and make a double low, but most of the time you don't. But either way, if you make a double low, chances are that low we had back in July, August is probably going to hold. That's the worst case scenario.
But you'd look at this. You'd look at this.
We'll actually go down that low, but we could.
You'd look at this as a contrary indicator, which is buy them while they're crying and sell them while they're yelling, right? Euphoria and depression.
Right. Well, this is American Association of Individual Investors, so this is a gauge of what it's a sentiment indicator. It's a gauge what the individual investors think what's going on. So it's I don't know. They call it dumb money, smart money. I guess this might be on the dumb money side. So you want to do the opposite what they're doing. So normally when they get really optimistic, it's a bad sign. If you look back in 2018 there, January of 2018, you spiked up to about 275, 3 area, and that was a significant high. The market really took a tumble back then. So to me, I guess we could back and fill here, but in general, we're going to work higher. You have any other questions on this chart where you can?
No, I use similar things. I look more at options, but basically telling the same kind of story.
Yeah,
so,
options. Actually, that's my last chart.
Yep.
This is like the weekly chart is an intermediate term picture. It takes a bigger picture than option sentiment. So
right.
Option sentiment can be more short term. It can be within a week or so. This is more kind of identifies the trend for the next month or 2 or 3, where option sentiment is more maybe 1 week or 2 or 3. So it's a different gauge of length of sentiment. So,
and of course, you are a longer term style trader, so you use more things like the McClellan oscillator, things like that are actually longer term trends instead of shorter term.
Right. Yeah. They're both above zero, and so it's in a bullish stance. There's another chart here. If you go to chart 2. We're going to flip way back to a minute chart, going from a weekly chart to a minute chart here. And this is kind of I made it to kind of keep me in a trend. I got long and I got out and I couldn't get back in. So right now I'm actually flat the market, not because I want to, because I kind of missed an opportunity to get long. I did get long at that low we had back in late August, but I got out and I didn't get back in. But this is just kind of it's a 1 minute chart with a 500. It's the top window. We'll discuss that one first. But all it is a tick index, and it's a 500 period moving average of a 1 minute chart or a 1 minute time frame, and it works pretty well. It's not perfect, but it got you in the beginning of September. If you notice, it's still hovering above zero. And as long as it stays above zero, we have to say the trend's still up. And so if you did get long in September, you still be long right now, according to that chart. And a little bit more confirmation. The bottom window is a 1 minute tick again, but it's a cumulative 500 moving average, or it's a cumulative 1 minute tick. And it works the same way, but it doesn't have a zero as a neutral level. It's just basically if it's going up, it's bullish. If it's going down, it's bearish. And that works pretty well. It gave a buy signal first part of September there. And if you notice, it's still continuing higher. So you got the 1 minute tick above zero, which is bullish, and you got the cumulative 1 minute tick, which is trending higher, which is also bullish. So on a very short-term basis here, the trend is up. Next Tuesday and Wednesday is a FOMC meeting, and a lot of times you go back and look at a chart on the FOMC meeting, a lot of times they can represent turning points in a market. So maybe that's what the market's heading into next Tuesday and Wednesday, in my opinion, could be a high.
Well, we're going to break, Tim. We'll be back. We're going to talk it some more. I've got some things that probably not on your third chart that we want to talk about, too. S&P up 15.5, NASDAQ up 45, Russell off 3, Dow's up 133. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back with Tim Ward. And did we want to go to chart 3 now, or are we still on chart 2?
Oh, unless you have a question about it, it kind of just shows you where you are right now in the market. That's, you have to say at the moment the trend's still up and really hasn't changed anything. We are testing the July high right now on the SPYs. Will we break through it? Maybe. To me, I think we might have a little rest here, but on a very short-term basis here, the trend's still up. So that's the only thing I wanted to say about that 1-minute chart. we can move on to chart 3 if you want.
Okay. We're on the CBOE options total put call ratio.
Yeah, it's a middle window, and actually the exchange or the equity, which I don't have it shown, but there's also, I watch the equity put call ratio readings, and usually when you get down below 0.55, I think yesterday's reading was 0.53. Usually you're near some sort of a high, where that's a minor high or a significant high. You really don't know. But this is yesterday's close, and the CPC is actually the total put call ratio readings. That includes the indexes, the equities, and the whole ball of wax. So it's a good, I guess it takes in all the option indexes. If you get down below 0.80, if you go back in history, it's lower 86% of the time within 5 days, and the average retracement is 0.7%. So, and it works fairly well. You can see some other times back in June and July, it picked out the highs pretty decently, and you did get pullbacks. The one in July, late July, was a big pullback. So we're back into sentiment-wise, at least on the total put call ratio readings, you're kind of in a danger zone right here because you are banging against the July high, and you got the total put call ratio readings below 0.8 as 0.78, and you got the FOMC meetings next Tuesday and Wednesday. So that combination suggests that at least you want to kind of wait and see what goes on here and what happens next week, because you could have a reaction. According to this put call ratio reading, suggests you may get a reaction off of that FOMC meeting announcement. So we'll have to wait and see. It's probably not the best time to step in the market, I'll put it that way.
The only other question I have, because I like to look at this particular one against the actual VIX put call ratio, the out of the money puts and calls, not just the ones that are, well, this is the total, all of them, all the ones that are in the money and all the ones that are out the money. But you get some pretty wild swings in the VIX put call ratio, and those also kind of again a very short-term signal, but a lot of times a good signal that can put you over the edge and putting position on, because you see that huge move. But the one thing I wanted to get to, we talked a little bit about gold. For me, it certainly looked like both gold and the bonds and the TLT were doing some kind of exhaustion move up at the top. TLT fell off pretty hard. Gold kind of followed it. Anything bigger happening other than a retrace and an up move in gold, or have you thought much about it?
I'm still long. I got long back in May, and I'm kind of watching it real carefully here. And, the June high, this goes back to GDX. The June high was a little over 31, and you went right up to it recently, end of August here on GDX. We didn't hit that 31 area, so I'm thinking we're just consolidating right below that area. And normally, you got to prove the point. You got to go up and smack that high of 2016, and if the volume stuff says you can't get through it, well, we never did that. So I'm thinking we're not going to really go down here. We may go sideways. That could change, but I'm actually still bullish. I'm still holding along my position. So I'm thinking the market may just build a sideways trading range right below the breakout area of the 2016 high. That's how I'm interpreting it. And we're building cause to bust through that area.
So I've got the GDX up here. You're talking about the August 12, 2016 high at 31.28 on the GDX. And that we got to 30.96, but you said a term that a lot of people that aren't deep into Wyckoff terminology may have said, and that is prove the point. You want to expand on that? Yeah,
when you prove the point, you actually have to touch that area. Was 31? What was it?
31.28.
Yeah, 31.28. You actually have to hit 31.28 or higher to really prove the point. And if you come close to it, the market starts consolidating right below it. a lot of times the market will build a trading range to build, in my opinion, like a spring being compressed, and you finally bust through that area. So I'm thinking that's what we're doing right now is we're compressing the spring and build energy to bust through that 3128 level of the 2016 high. So even though we did have a kind of a smackdown here over the last week or so, and it looked pretty scary, big volume and everything else, but I'm thinking it's blowing itself out. And we'll at least go back up and test that area. We may hit that 3128 and then start possibly a bigger consolidation, or we may go back up and hit it and bust through it. So I'm not sure which one we're going to do, but I'm halfway convinced, I don't know if that'd be the right word, that we'll at least go up and touch that area before I make my decision whether we're going to have a bigger consolidation or we actually are going to rally through it. So I'm kind of waiting to see that happen.
So
I don't think we're, right now I think we're pretty much looking at least on a short-term basis, a fairly short-term low. So I think I'm thinking we're going to just start a trading range, 27.5 is support and 31 area is going to be resistance when we move sideways. So I'm not taking my long position off. And also, when we came off that low back in May, I had some indicators that got over plus 50. And what they were the up-down volume and the advanced decline for GDX. When they get above around plus 50, normally you have the rally continues for another 7 months. And I've been having a target for a high possibly in December because coming off that low, the market had a really advanced decline and up-down volume initiation of a bigger decline or a bigger advance. So I'm thinking we're looking at something bigger than what we've seen so far, just because of the energy coming off of that May low.
Yeah, we're getting ready to come up on the break on this one. But, yeah, you've got pretty much the similar volumes at the highs there, so more than likely you get one more test of the high, one more bite of the apple up there at the top. Tim, I want to thank you for calling in today. You can always reach Tim at theord-oracle.com, his website and his newsletter are there. And, of course, you can always check out The Secret of Price and Volume. Get it on Amazon. Thanks a lot, Tim. We'll talk to you in a couple weeks.
All right. Thank you. Mm-hmm.
You bet.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And I wanted to show a couple of charts in the newsletter this morning. Got a question already that says it's time to go short. And the answer is, I think it's time to do nothing. What I'm showing here is the S&P SPY options for Tuesday. And the, what happens depending on where it would, the S&P would expire a week from tomorrow, and how much money would be won and lost. And you basically get something that's right around 300 on the S&P cash. But, there's, up, you move 20 points up or down, and you're talking about $1 billion in options. So there's some money to it. Now, what we got yesterday was the biggest flattening that we've seen in many years. And maybe that's because the FOMC is coming out. But when we talk about option market makers going delta neutral, this is a big deal, and maybe one of the more dramatic examples of what happened. They flushed out all the money that's really can be won or lost up basically 20 points higher in the SPYs and 50 points lower. So you've got maybe even 60 points lower. So you've got a market where there's very little risk going into what's going to be quad witching next Friday. And when option market makers don't know what's going to happen, they back away. Same thing is if you're sports betting and there's two teams that they don't know what could happen, they're probably going to have fairly decent points on each side of the table to get the odds correct. And at this point, all they did was back away. So there isn't a great deal. What is there is fairly expensive. So no one wants to put a lot of risk out going into this FOMC meeting. Kind of jives with what Tim Ward is thinking, that there's probably a fairly significant move coming out of the FOMC. And there's nothing in any kind of indication that says that we should pull the trigger right now. The bigger things are the TLT, continuing on weakness in gold. Those two things kind of make you think that a lot more money would be going into equities in the short term, and maybe we're going to get, or at least the equity market's going to get what it wants next Wednesday and Thursday. So we've got that. We've got a bit more going on, but it is the best traders in the world gravitate and are moved into the options space. These guys also know where the bodies are buried. They know where everybody's going to blow up if they're on the wrong side of these, if they're selling both puts and calls, when it becomes extremely painful. So they have a look behind the curtain that we don't get as retail investors or even professional investors. The option market makers have a much better call, a bit of the wisdom of the crowds. But when everybody backs off as far as they did yesterday, it gives me pause, because generally what it means is fairly severe turbulence coming ahead. And that means that we could have the same kind of move down tomorrow as we had up, and Monday up what we had down. So at this point, you really want to pick your battles, and you want clear and unambiguous signals. You don't want to be running off half-cocked into next week, which I suspect is probably going to be busy till about Tuesday afternoon, where we're going to go light until we get the FOMC meeting announcement. And at that point, probably a lot of action. I suspect what I'm looking for is probably a play into that quad witching. If we can get a lot of people on the offsides, there may be a great deal of money to be buying cheap puts and calls into Friday. But my guess is we're going to have the announcement about 2. Later on in that day, we're going to see at least one side of that equation crushed, and zero belief that the market will come back to the direction it went on the FOMC meeting. And that's probably doing just the opposite of what everybody else does after the FOMC meeting, is going to be where the money lies. There may be some other opportunities out there in equities and in commodities, but those are probably going to be very targeted. It's not going to be a shotgun blast like buying an index like the S&P or the NASDAQ. It's probably going to be in one of those subsectors, or probably more than that in individual stocks themselves. So I'm not a big believer at putting a lot of money at risk in the indexes at the moment, maybe in the sectors, and more than likely in individual stocks across the next week. At that point, I do think whatever turbulence comes out of the FOMC, I'm hoping it pushes the market down for a little while. We get a little respite, and then the rest of the trend, which seems to be fairly bullish for the rest of the year, minus any kind of outbreak of war, looks to me like we're going to run to the rest of the year. If we get to the FOMC meeting, I think that's kind of the key. We're going to go into October, and from then on, I think we're probably fairly bullish up until the end of the year. And a lot of the knee-jerk reactions that we've had for trade, political issues, are kind of fade as far as I can tell. So I'm going to say hold your powder dry, wait for unambiguous signals, one that a blind man could see, and that would probably help you a great deal. Too many people wanting to jump and too froggy today for my liking. I like a little better setups than we have now. But again, if you would have gone and chased GDX this morning, you would have seen that it basically rotated and gave it all up again today. So you can get some bounces after a downtrend. Everybody wants to believe you get a V move in the market. It doesn't always happen. A lot of times this one happened a little faster than I thought, but I thought we were at least going to come back and retest the September 10th low in the GDX down here at 2754. We're not that far away from it. Maybe we get a test tomorrow or maybe Monday or Tuesday. And if you're feeling a little bit more bullish about gold, that would be a much better entry point than, like I said, going, I think, off half-cocked right now. I kind of like the position in cash for most everything except my long-term trades right now. To see what else do we have. Okay, so that answers that question. Got a couple of more. NFLX. Okay. Still haven't gotten down there. Still think we probably see 280, 275, something like that. And I don't think you want to make a decision on this one until you see that tested on lighter volume or heavier volume at that 275, 280 range on Netflix. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Take a quick look at Apple and see if there's anything else going on, because we're basically starting to break some of the previous highs. As we said yesterday, a big sign coming in the market with this test of 229.90 in Apple. That's the October 3rd, 2018 high. Or $3 away from that. Could easily do it tomorrow. And of course, if you're thinking that way, you're probably thinking, well, if it does it online, probably don't want to do that. Today, we've got 44 million shares. Oh, is that right? Yeah. Yesterday, we had 44 million shares going into that 29 million share high. We're not quite into that peak of the candle there, or within 0.5% of the high. So you really want to look at the volume today, which is not bad. Looks like we're going to get somewhere in that 28 million share range. But probably when a lot of people are asking me if it's time to go short or long, I'm going to be watching Apple very closely over the next couple of days. It doesn't need to have that much volume to go blow out that previous high comparison to the last couple of days. So the signal we may be wanting to get may be worth hanging back a little bit instead of anticipating out here, because if this is a big move in Apple, it's going to drag a lot of the market with it. We'll talk more tomorrow about the antitrust issues and that going forward. But I think we've got some time. It took a year or so to really get going on Microsoft. Probably take a similar amount of time to really get going for all these states suing the big FANG stocks. So we'll talk more about that tomorrow if we get a chance. In the meantime, what do we want to do? We want to sell when we can, not when we have to. And we want to be back here. Same time, same bat channel tomorrow.